Once again, for those who are just joining us, you're welcome to our webinar. For those who are just joining us, I mentioned my name earlier. My name is Adewale Kendi, and I am the Media and Communications Manager for Edfrica. And I welcome you all to this webinar where we are going to be talking about our CAC. Before we go into that, I'd love to, for those who don't know about Edfrica, I'd love to tell you a little about Edfrica. I know and I trust that some of us would have done a little background work to go online to know about Edfrica, what we do and what we stand for. Okay, so basically at Edfrica, what we do is that Edfrica is an entrepreneurship platform where we help entrepreneurs who are looking to build solid business plan, those who need access to funding opportunities, and also business people who want to work with consultants to understand the African context. As a platform, we try to ensure that we give you support in this area to help you from surviving in your business to scaling. We ensure that you find opportunities that aligns with your goals and your vision where your business is concerned. And this is born out of nothing but out of passion by our founder, our co-founder, Dr. Emmanuel Odumusi. He had seen that the way most business owners struggle out there, where funding is concerned, they barely have opportunities that they can lay hold on to scale from moving from surviving to a flourishing business. And so he thought about, okay, why not let's start something? And that was what we came up with Edfrica. In code, Edfrica itself is basically mean educating Africans. So it's not just to educate you, but it is also to ensure that you get opportunities that will help you scale, that will help your business survive. And so part of what we do is we organize webinars like this where we get to help business owners to know things that they ought to do where their business is concerned. Like I mentioned earlier, that you want to move from the surviving part to where you're scaling, you're thriving. And part of the things to ensure that you're moving from a point of survivor to a point where you're thriving is that you get knowledge, adequate knowledge that you need where your business is concerned. And one of the things we do is that we come up with webinars like this. Aside that, we provide opportunities for you that helps you to that helps you to survive. We come up with webinars like this, and that is why we are bringing up this webinar to your doorstep today to help you learn about CAC. And today we'll be looking at let me share my screen because we have a speaker in our midst this afternoon who will be taking us through today's section. Yeah, so we'll be looking at FRC, CAC, and you and I know that there's a new policy where CAC is concerned. Policy, we have policies going on and on around, and there's a policy that has to do with your CAC, and most people do not really know, okay, what do they do where this policy is concerned? How can I navigate through? What do I need to know? What do I need to do so that this policy does not really affect my business? And that is why we have come up with this webinar. It says, navigating Nigeria's most recent tax and regulatory policy changes. And that's why we've come up with this webinar. And that will be taking us through this section is our own facilitator, a tax consultant, Iseoluwatobi, Oluwafemi. And let me read the bio of Madam Oluwatobi to us, because I know some of us might have seen her on LinkedIn. You might have, when you saw the flyer, have gone to check, who is this tax consultant that will be coming up to talk to us. Okay, so in short, Madam Oluwatobi is a seasoned consultant in the tax, regulatory, and people service division of KPMG Africa. She has over 3 years of experience in supporting businesses across various industries. Her expertise spans tax registration and deregistration, indirect and corporate tax compliance, tax audit support, and strategic tax advisory for clients in both the consumer and industrial sectors. Before transitioning into tax, Iseoluwa gained valuable experience working as a part-time consultant, as an auditor and human resource officer in both the consulting and industrial space. This diverse background has enriched her understanding of business operations and positioned her as a versatile advisor. She possesses deep proficiency in Nigerian tax regulations, including personal and corporate income tax, business tax, compliance, corporate tax planning, and advisory services for both local and multinational companies. Iseoluwa is a certified associate chartered accountant and an associate member of the Chartered Institute of Personnel Management. So this afternoon, welcome with me as I hand over to our facilitator, Iseoluwatobi Oluwafemi. Please let me see, help me, let me see your hand emojis up there as you, yes. Thank you. Thank you. I can see some of us already. Thank you. So, ma'am, over to you. Thank you very much.
Hi, everyone. Good afternoon. It's my pleasure to be here this afternoon. And we'll be talking briefly on navigating business compliance in Nigeria, your role as a business owner, and how you can leverage on the available incentives for business owners in Nigeria. I'll be sharing my slide very quickly. We all understand that the business environment in Nigeria has been evolving, and especially with the introduction of digitalization by the government, we see that new changes are coming up. Previous acts are being repealed. New acts are replacing the previous acts. Generally, these changes, one way or the other, affect our businesses, and knowing these changes will help us to take advantage of whatever incentives are available for us. What I've seen in practice, based on my little experience, is that the lack of knowledge has exposed many businesses to even penalties that could have been avoided. So that's why I believe this webinar would be of help to businesses who are looking to stay compliant in the legal environment, and to even attract investors to their businesses. There are opportunities we need to leverage on, and in this webinar, we'll be considering the regulatory framework for establishing business in Nigeria, what the law says, how to take advantage of what is available, and what you should be considering before even thinking of proceeding with business registration in Nigeria. We'll also be looking at the efforts of the government to digitalize tax administration as well as business registration. We are going from the archaic method of doing things to digital method of doing things. We have left the era of walking into government offices to submit papers or files, and we are moving into the era of doing everything online. So we want to see what changes have been introduced and how we can leverage on these changes. We'll also be considering the government reforms, which is my own strong point because I'm a tax consultant. The new reforms of the tax laws, what has been repealed, what has been introduced, and how we can also leverage on available incentives. Quickly, let's proceed. Yeah. So the regulatory framework actually is not like a policeman, but not a policeman also. The major reason for having these regulatory bodies is to promote transparency in Nigeria, not necessarily to police businesses. If you've had conversations with various business owners, the fear of the government coming after their business, the fear of this and the fear of that has hindered many people from being compliant with the regulations of doing business in Nigeria. And compliance itself, aside from the legal penalties and all that, not complying to these regulations would typically hinder investors from even wanting to throw in funds into the business. So it is important that you know that the law itself is not a policeman. These regulatory frameworks are just to guide business in Nigeria. And the introduction of digitalization has even made things a lot easier. I mean, challenges that we have had in the past with enforcement and um, generally with compliance, because some might have given excuse in the past that I went to the government office wherever, maybe the CAC or the FIRS as the case may be, but I was not attended to the way I wanted to. All those challenges, many of them have been taken out by digitalization. So, in summary, the regulatory bodies in Nigeria are just there to provide accountability, to guide businesses, and to promote transparency. And I hope that we will see that as we proceed in our webinar this afternoon. The core regulatory institutions, like we have seen on our flyer, is the CAC, the FIRS. We have other ones like the CBN and the NIPC. That's Nigerian Investment Promotion Council. We have that. We have the CBN. I think we're all familiar with that. That's the Central Bank of Nigeria. We have the CAC, which is the Corporate Affairs Commission, and the Federal Inland Revenue Service. The Federal Inland Revenue Service has a subset, which is the State Internal Revenue Service. The State Internal Revenue Service is the one charged with administering taxation in the different states represented in Nigeria. So we'll be looking at, our focus today will be on the CAC and the FIRS. We'll touch base on the SIRS, but just have it at the back of your mind that whatever law is governing the FIRS is the same law that is governing this SIRS, which is the State Internal Revenue Service. So the Corporate Affairs Commission, like I mentioned earlier, is the principal body that is charged with registering companies in Nigeria under the CAMA 2020. There's a recent introduction of CAMA 2025. Maybe I'll talk briefly about that. But the CAC was introduced under CAMA 2020, and the core function is business registration, administration of annual filing of annual returns, then updating companies' record, as well as search of registered businesses. So where there are non-compliance, it is the CAC that will go after these businesses. The kind of registration business requires, either as an incorporated entity or just a registered business name, is the CAC that does all that. Then when you need to file your annual return as a registered as an incorporated entity, the CAC is also the body that is charged with the administration of that. So business owners must be aware that there are key responsibilities to the CAC to ensure that their companies remain compliant. And let me just quickly touch on the recent introduction by the CAMA 2025. Sorry, give me a second, please. So we see that the CAMA 2025 has promoted ease of doing business, and the major thing is just the digitalization of many of the processes that was involved in carrying on business in Nigeria. Before now, annual general meetings were to be held physically, maybe at a stated location, but now the CAMA 2025 has provided that remote or virtual meetings can be held and documented as appropriate. We also see that electronic filing can now be done for share transfer, for meetings of private company. The annual filing I talked about earlier can now be done virtually. You don't have to walk into the CAC or go through the paper method anymore. That was in the past. Now, everything that needs to be done can be done online. You can go to the CAC portal and have that concluded. Then we also see that he introduced the statement of compliance. So there must be an agent that will serve as a representative of representative of the company. The agent is maybe a lawyer or someone in the legal environment, so to say, that would issue a statement of compliance. must be signed, it must be declared by the lawyer, and it must be um, attested to by a notary public to be acceptable. Now, that was not in the CAMA 2020 before now. That was not a requirement for filing annually before now. But what we see is that now those changes have been made, and you have to stay compliant to stay in the business environment. Now, know that before I proceed, I would just like to mention that this annual filing or our responsibilities to the CAC as business owner is not necessarily for every type of business. Excuse me. It's not necessarily for every type of business. Businesses that are registered as incorporated entities are the ones that are typically charged with the responsibility of these annual filings. Businesses that have shares, that have directors, that are registered as incorporated entities are the ones that are charged with this responsibility to the CAC. We also see reduction in filing fee that has been reduced to 0.35% of the value of the charge. We also see that everyone was before now everyone was mandated to procure a common seal, but that is not necessary anymore. That has been repealed. The new act has amended that, and in most jurisdiction of the world it has been expunged. So our new act has also expunged that. We are not necessarily mandated to procure a common seal anymore. Let me just quickly proceed to talking about the CAC. Sorry, the FIRS. The FIRS, like I said earlier, is the body that is charged with administration of taxes in Nigeria, and they don't really administer tax to companies in Nigeria. Also for individuals, they're also responsible for tax administration to individuals in Nigeria. So if you run a business or you earn an income in Nigeria, and I believe that most of the people gathered here today are business owners, any income you earn in Nigeria is either liable to the SIRS or the FIRS, as the case may be. Like I mentioned earlier, the SIRS is a subset of the FIRS. So they are charged with administering taxes within states in Nigeria, but the FIRS is charged with administering taxes for the federal government, the whole government of Nigeria. And although the FIRS is the SIRS is charged with administering taxes of states, individuals that are liable to income tax. Individuals that are liable to income tax gotten from MDAs, that's ministry departments and agencies in Nigeria, are also liable to remit their taxes to the FIRS in Nigeria. So the FIRS is charged with different responsibilities, and that includes assessing and collection of taxes in Nigeria. They enforce tax laws. We have different tax laws. We have the company income tax, withholding tax, the VAT tax. They are the ones that are charged with the responsibility of ensuring compliance with these laws, with these regulation, collecting government monies from companies, from individuals, as the case may be. They are charged with also issuing tax identification number. I was supposed to mention this. Now, with the whole digitalization process, what we see is that when you register your company or your business in Nigeria, you're automatically issued a tax identification number. So you can no longer hide under the guise of, I won't be seen, I won't be known, my business is not big. The FIRS and the CAC, and even all regulatory bodies in Nigeria for that matter, they now work hand in hand. So they have real-time overview of all registered businesses in Nigeria. So once you register your company or you register your business, you automatically issue the tax identification number. Before now, when you register your business and you get your certificate of incorporation, you won't necessarily see a tax identification number on your certificate of incorporation. But that has changed. Now when you register your business, it comes with a tax identification number. But you still have the responsibility of visiting the FIRS for a formal registration and for issuing your tax identification number. This is because when you are issued a tax identification number upon registration with the CAC, it does not necessarily have to come with the office. I mean, the tax office you are supposed to be responsible to. I mean, all the tax office where your taxes are due to will not necessarily come with your tax identification number. So going to the FIRS to register your interest in getting a tax identification number is also a necessity after registering for your business. Otherwise, you might make attempt to even remit your taxes and still find yourself not being compliant enough because those taxes are going nowhere. They're just maybe sitting in the FIRS account somewhere and cannot be traced to your own personal account. The FIRS is also charged with the responsibility of providing companies with tax clearance certificates. What we see these days is that before now, many companies do businesses in Nigeria, sometimes pay tax, sometimes do not pay tax up to par, and they get away with it. But now, with the introduction of digitalization and the introduction of Tax Pro Max, things can be seen with time. Before now, we apply manually for the TCC, that's the tax clearance certificate, but not anymore. With a click, you can get your TCC. The problem with that is that if you have any outstanding tax obligation on your portal, you won't be able to get your TCC. And without your TCC, it's difficult to do business in Nigeria. Get loan, process some certificates, process expatriate quota. Those things become very difficult. So it is very necessary and important to know that. So it is very important that you know that you need to be very compliant with your taxes to be able to have access to your tax clearance certificate and not to hinder your business from making progress. They're also charged with managing the e-tax platform. That's the Tax Pro Max portal I talked about. The Tax Pro Max portal is the portal for filing your returns, your tax returns, CIT, VAT, withholding tax, as the case may be. I also like to mention that for the SIRS, that's the State Internal Revenue Service, they also every state will usually have their method of filing. They usually have their own portals, and some of them, very few of them, still file their returns physically. But for the most part, so many of them are already digitalized. I don't know. I'm quite sure that many of the people that are on the call today are residents in Lagos. I'm aware of the LIRS portal, e-tax portal, and I'm also aware of some other ones that are outside Lagos as well. So the either the State Internal Revenue Service or the Federal Inland Revenue Service are the ones charged with the responsibility of administering these portals, providing tax clearance certificate. I would also like to mention that for the tax clearance certificate, it's not only for incorporated entities. For businesses that are registered as sole proprietors or registered as partnerships, they are also expected to obtain their tax. In fact, every individual in Nigeria, as far as they are paying tax, you are an employee in any organization, you are liable to remit your payee every month. And you are supposed to get your tax clearance certificate at the beginning of a new year. That's from the first day of a new year. A new year, according to the FIRS and the SIRS, is the 1st of January. That's a new accounting year. So you are liable to get your tax clearance certificate. Now, if you have not been compliant, you won't be able to get that tax clearance certificate. For the SIRS, I would like to mention again, for the SIRS, to get your tax clearance certificate, you must file your annual return We'll talk about that later under the types of taxes. You must file your annual return consecutively for the past. You must have filed your annual return consecutively for the past 3 years to be able to obtain your tax clearance. So it does not exempt you. The law does not exempt you from being compliant, not because I'm a sole proprietor or I'm a partner, I'm in a partnership business. That does not exempt you from compliance. You just have to be compliant. You are legally required to register for business. Otherwise, there are consequences. Like I mentioned earlier, you forfeit your TCC. I mentioned that the FRS has, according to the FRS Establishment Act, they have the access to every business owner's bank account. They have access to the banks directly. They can freeze your account, and there are fines, there are penalty, avoidable fines and penalties, and they can even go as far as um taking you for an investigation, taking up your business for an investigation and prosecution legally. They have the right and the access to do that according to the law. So it's very important to know all this and to stay compliant to avoid all these penalties for non-compliance. Before I proceed, I would quickly like to touch on the different types of taxes so that when I go into the changes that the recent tax reform has introduced, we will understand what I'm referring to. There are different types of taxes, and on this space, I understand that many of us are medium and small enterprises. So I will start with the PIT because many people are registered as business owners in Nigeria rather than incorporated entity. To be an incorporated entity, you must have directors. You must have. I think having a director is the most important thing. You must have a director at least, and many companies do not have. In fact, the requirement for registering as an incorporated entity is more. So many people prefer to register as a business name rather than an incorporated entity. So they carry on their businesses legally without necessarily having to comply with the extras that come with being registered as an incorporated entity. So I will talk about the types of taxes that businesses and individuals, and by individuals, I mean also businesses registered as a sole proprietor or a partnership are liable to in Nigeria. We see the personal income tax. Any income you earn from any employment or from your business as a sole proprietor is liable to personal income tax in Nigeria. I think that's the simplest way I can say any income you earn for your own self, for your own personal purpose, from any work you have done for anyone is liable to personal income tax in Nigeria. It's a progressive tax, yes, it's still a progressive tax, even with the new reform. It used to be a progressive tax from 7% to 24%. It's a graduated tax, but there have been changes. It's now from 0% to 23%, and we'll see that as we make progress in the presentation. We also see the company income tax. Now, this is for incorporated entities. Incorporated entities are expected to remit taxes on their on their profits, on their adjusted profit.
Accompanying saving reports of we have the bills.
Sorry, company income tax is taxes that are due on the profit of companies in any financial or accounting year, and these taxes are liable for filing or are due for filing every 6 months after the end of a financial year. So if you have a year end of December, for instance, you are supposed to have filed your tax return by 30th of June. Anything after 30th of June exposes you to penalties for not filing the return. And sometimes the penalties for not filing is even more than the actual tax. In fact, many times the penalty is more than the actual tax that is supposed to be remitted, that was supposed to have been remitted. We also see the education tax. Many times we remit the education tax along with the company income tax. And usually, in fact, it has graduated from 2% to 2.5% and currently 3%. Now, for the company income tax, I was going to mention that for small companies, in fact, they are not liable to taxes at all, but they have the obligation of filing their returns. By that, I mean that although small companies in Nigeria are defined as companies that have a turnover of 25 million or less. So they are not they are liable to tax at 0%, which is not being liable in actual sense. But they must file their return. Failure to file their return will expose them to penalties, and the penalties might even be greater than even the revenue or whatever turnover they've made in the year if they are not careful, if it prolongs for a very long time. Then we also have medium-sized companies. Those are companies with turnover of 25 million or less than 100 million, and their taxes are due at 20% of their adjusted profits. That's after you have taken out profits that are not taxable, as well as expenses that are not deductible. Then the large companies are the ones liable to 30% company income tax. Now, to proceed, the VAT Act also exempts small company from remitting VAT. So companies that have not reached the threshold of 25 million before now, that was the definition of small companies. But when we look at the recent Reform Act, we'll see the new definition of small companies, because that has changed and that has affected the way these taxes will be administered going forward from January 2026. So the value added tax is like a consumption tax levied on sale or purchase of goods and just supplies, basically. Is always imposed on supply of goods and services, and the standard rate for the VAT is usually at 7.5% in Nigeria. However, because of the recent Reform Act, some things have changed, and we'll find out that many businesses might not even be liable to deduct or even remit VAT, because VAT is the responsibility of both a buyer and a seller. Sometimes when you are not charged VAT on whatever supply was made to you, you are supposed to self-account for the VAT on those supply and remit same to the government. So that's why I said that it is both the responsibility of a buyer and a seller. Then we have petroleum profit tax. That's outside the purview of this discussion. Then we have withholding tax. Withholding tax is more like an extension of company income tax. So withholding tax is also levied on income. So when you have a transaction with anyone and they are paid, you receive money. You are paying such a person, rather. You are supposed to withhold a certain amount according to the law. We have a schedule for that. I'm not going to go into the technical bit of it, but just understand that withholding taxes they are called transaction taxes and is applicable to purchases, mostly purchases. When you are purchasing anything, either a good or a service from anyone, you're expected to withhold, and it's at various rates. There's no single rate for withholding tax. It depends on the kind of transaction, either dividend, royalty, interest, as the case may be, contract or even technical service. We'll see that the rates are different for different kinds of taxes. Then we have capital gain tax. Capital gain tax is a tax levied on profit from disposal of assets. The asset might not be land or building, it might be shares or bonds, as the case may be. So the profit you get from disposing that asset after you have taken out the incidental cost, that's the cost that you incurred in the process of disposing such assets. the profit you get on such asset is what we call liable to is what is liable to capital gain tax. And before now, capital gain tax used to be at 10%. But we see that the new tax act has changed that. The reform in the tax act has changed that. Now as we proceed, we will see what the new regulation said it should be. We also have Stamp Duties Act, and stamp duties tax isn't yes we have the ad valorem stamp duty tax, and we have the fixed duty. And generally, stamp duties are levied on agreements, contracts, documents generally are liable to stamp duties, and it also has various percentages. So we're not going to get into the technical bit of it, but generally that's a summary of the most common types of taxes that businesses and individuals, as the case may be, are liable to in Nigeria. So let's talk about the recent tax reforms and the updates that have been made. I'm sure that many of us are aware that the president has signed 4 tax reform bills into the act, and that was on the 26th of June 2025. And now the act has been gazetted, that is, it has become a full-fledged law. They are enacted into law, and we expect that by January 2026, the act will start to take effect. So we need to stay informed of these changes. The act has repealed many things. I mentioned CGT, I mentioned CIT, I mentioned personal income tax. I mentioned stamp duty. I mentioned VAT. The act has made changes to many of these things. The act has made changes to many of these acts, these previous acts, and now we'll see those changes that have been made. Let me start with CGT. Before now, I mentioned that CGT used to be at 10%, and CGT was usually filed as a separate tax from the company income tax. But now what we see is that all the proceeds from disposal of capital assets and profits from a company's regular business transaction are now liable to company income tax. So more like the tax that used to be 10% is now 30%, no longer 10%. And they will be filed together with the CIT. I mentioned that the CIT is usually filed at the end of a financial year, and 6 months after the end of the financial year rather. So these taxes will be filed together. They are no longer separate taxes like maybe we have heard people do before now, or maybe we ourselves have done before now. So the CGT is now merged together with the CIT. Before now, CGT or indirect transfer, maybe I should not even bore you with a lot of this, but before now, CGT on indirect transfer of shares was not even in the company income tax act at all, or even the CGT act at all. But now the new tax act, that's the Nigeria Tax Act, has introduced this CGT on indirect transfer of shares in Nigeria company, as well as disposal of shares by a non-resident, that has now changed the ownership structure of a Nigerian company. Any profit or proceed arising from that disposal is not chargeable to tax in Nigeria. CGT on disposal of shares. Before now, we see that the exemption threshold for CGT on disposal of shares was 100 million, but that has increased to 150 million, provided that the gains do not exceed. So I need to give clarify the difference between proceed and profit. Proceed is the sale, while profit, that's the gain. The gain on whatever sale is made. For instance, you buy an asset at 20 naira, you sell it for 30 naira. The gain is 10 naira. It is that gain that we charge CGT on. So that's just for clarity. So provided that the gain on an asset does not exceed 10 million naira, you are not liable to remit CGT on it anymore. Another change is the definition of interest. The definition of interest is now inclusive of penal interest, share of profits in interest-free arrangements, then finance costs. These are notional costs. They are not actual costs. For instance, let me use gain on unrealized gain. For instance, you bought something outside Nigeria, maybe at USD rate of say £1, then you are not able to get dollar immediately, or you got the goods. At the time you are getting dollar, say USD has dropped to 0.75 kobo. The gain of 25. In fact, you've not gotten dollar. You are closing your books for the year, and now USD has dropped to a rate of 0.75 kobo. The gain on that before now we usually exempt it from tax. But now because it's not a realized gain, it's not an actual gain. It's not like you have paid off your liability for the goods you purchased. It's just an accounting principle. But now the tax act is saying even that gain is now taxable. So anything like anything like a notional gain, notional interest are now taxable. Then royalty has been defined to include payment of any kind that is received or receivable on any right of use or exploitation of any property. If you have access to use anyone's property or any intellectual rights you have to anyone's property, you're supposed to charge royalty on it. Then deductible interest expense. These are for companies typically. Interest expense that are deductible before now is limited to 30% of the company's earnings before interest, tax, depreciation, and amortization. But now there's no limitation. Any interest expense that the company has accrued as at the date of filing is now exempt from taxes. Quickly, let me make progress. Expenses. Before now, we used to call something rent test. We call it expenses that are wholly, reasonably, exclusively, and necessarily incurred. But now, the Tax Act is saying reasonably or necessarily are no longer applicable. As far as the company has incurred such expense, they are supposed to exempt such expense from tax. We are not supposed to add back. What we do before now is we go through each of the company's expense and we try to justify if those expenses are actually expenses that are deductible, but not anymore. As far as the company has incurred such expense, they are deductible. Bad debts, they are also notional. They are notional debts, and before now, we usually do not allow these debts because we feel like they are just provisions, and that is what the Act also says. That was what the Company Income Tax Act said before now. But now the Nigerian Tax Act has changed that every kind of debt that the company feels that they are unable to recover are now deductible. We can now allow those debts. We can now allow those debts as expenses when calculating the company's taxes. Research and development deductions. These are before now it was limited to 10% of profit, but now it is limited to 5% of turnover. Turnover is not profit, by the way. Profit is what you get after you exempt your expenses for the year from your turnover. Profit is what you get. But now we are saying it is limited to just 5% of turnover for the year, and proceed from the sale or transfer of assets on which research and development costs were claimed would now be taxable. So any proceeds from the transfer of any assets on which you have claimed research and development costs are now taxable. Foreign currency expenses. This was not really explicitly provided for under the company income tax before now, but we just try to justify if they are allowable or not allowable based on our review of the company's document. But now what we see is that expenses that are incurred in a currency that is other than naira, as far as the exchange rate as at the date those expenses were incurred are at the central bank rate, they will be allowable. Anything that is in excess of the central bank rate will not be allowable. So where we see that companies source for maybe they source for currency outside the purview of the Nigerian banks or outside the central bank rates, those the extra expense will now be charged to the company's account. They will no longer be allowable deductions for tax purposes. Then payments to non-resident persons. There's this terminology we call permanent establishments. Permanent establishments are they are more like non-resident companies that are carrying on business in Nigeria without a full-fledged fiscal location in Nigeria. And there are criteria that we use to judge that. Maybe it's not also under the purview of this discussion, but there are criteria we use to judge that. And before now, we will typically exempt payments to non-resident companies from withholding tax. But now the definition the NTA has widened the definition, and payment to non-resident companies or companies with permanent establishments in Nigeria are now taxable in Nigeria. We are no longer exempting payments to non-resident companies. I was talking about withholding tax the other time. There are exemptions to withholding tax. For instance, when you purchase something from outside Nigeria, either a good or a service, as the case may be, the good or service might not be liable to withholding tax in Nigeria. But now that is going to change. That will no longer be the case. If you purchase anything from non-resident company, it might be assessed to tax in Nigeria, depending on whatever transaction it is. Minimum tax rates or effective tax rate. Before now, the minimum tax rate was 0.5% of turnover. While multinationals, Nigerian companies, everybody had the same minimum effective tax rate. But now that has changed. The minimum effective tax rate for multinationals is no longer 0.5% of gross turnover. Any company that has a turnover of 20 billion or is a multinational must now have a minimum effective tax rate of 15% on net profits. That's profit after you have deducted your expenses from your turnover. That's your net profit. So 15% of your net profit is what is now liable to tax. So if after you have computed your taxes for it, because we operate a self-assessment tax method in Nigeria, if after you have computed your taxes for the year, you discover that your tax is less than 15% of your net profit, then you have to compute the additional portion of that tax and remit same to the government. Then development levy was not on that company income tax, but now we see that development levy has been introduced, and this development levy will take out tertiary education tax, which I talked about earlier. That's EDT, education tax. It will take out NITDA. It will take out NASENI. Those are National Science and Engineering and Infrastructure. I can't remember the exact acronym anymore, but some of those things will be taken out, and now the development levy will replace all those taxes. Then capital allowance. Before now, capital allowance was granted on qualifying capital expenditure, every kind of qualifying capital expenditure as far as the company or the individual purchased an asset in the course of the year, they are allowed to claim capital allowance on it, but not anymore. If you purchased an asset and VAT was not charged, for instance, I was talking about non-resident company. If you purchase an asset, for instance, from a company outside Nigeria and they typically did not deduct value-added tax on such purchase, you are supposed to self-charge yourself and remit the tax on such purchase to the government. Where that is not done, at the point of computing your taxes, you will not be allowed to claim capital allowance for it. By the way, capital allowance is more like a replacement for depreciation. So you have an asset. The law does not allow you to claim the cost of that asset in a single year. You're supposed to spread the cost of the asset over a period. So that is what we call capital allowance. You take it gradually. But where you have not remitted VAT or your import duty on such assets, you will not be allowed to claim your capital allowance on such assets. Then before now, under capital allowance still, we had initial allowance and we had annual allowance. Any year where you purchase an asset, you're allowed to claim an initial allowance. Is always a fixed amount and is always only in the first year of purchase of an asset. Then an annual allowance will now be claimed every subsequent year. But that is not the case anymore. You only have a single allowance now. When you purchase an asset, you're only allowed to claim a single capital allowance. And we have different rates for it. That's the technical bit. I'm not going to get into that in this discussion. But just know that the Act has repealed initial and annual allowance. Then balancing adjustment, there's nothing like that anymore. Before now, if you purchase an asset, for instance, you are supposed to claim the capital allowance on that asset over a period of 4 years. And at the third year, you dispose the asset, you sold off the asset. Before now, we'll compute balancing adjustment. If the asset was disposed at a value that is lower than what it was supposed to be disposed, we'll compute the balancing adjustment. If otherwise, maybe a value higher than what it was supposed to be disposed, we'll also compute the balancing adjustment. But that has been taken out. Going by the new Tax Act, we are no longer computing balancing adjustment on any asset that has been disposed in the course of the year. Then coming back to value-added tax. Before now, recoverable, there's something we call impute VAT. Impute VAT is VAT on purchase of goods. I mentioned that VAT is both on sale and purchase. When you purchase any good and you pay VAT on it, that is what we call impute VAT. Before now, what was allowable as a claimable impute VAT was restricted to any import any import that forms part of your stock in trade or forms raw materials for further processing, maybe for those in manufacturing industry, or that forms part of your stock for resale. That was the only thing that the Value Added Tax Act allowed us to claim impute VAT on before now. However, the Nigeria Tax Act has said you can now claim impute VAT on every kind of purchases. That's broadened the scope to include both services. Before now, services were not allowed, it was just restricted to goods. But now, services and every kind of fixed asset purchase, every kind of supply, as far as it was consumed in making taxable profits or in making supplies or in improving the quality of your delivery as a service organization or as a company is allowable for impute VAT claim. Then VAT on personal care item. Personal care item before now was not included as part of the definition of what was claimable. But now the Act has brought it in and has expressly stated that it is now claimable. Then lastly, under the VAT, we see that there are introductions rather of digitalization to the administration of VAT. Before now, every month, every company will file their VAT return manually, not manually, via the tax pro max form, but then you have to impute your revenue, your exempted income and all that. But that is not the case anymore. The new Reform Act introduced by the FIR, sorry, the new introduction by the FIRS has now tried to merge the accounting system of each company with the tax pro max e-invoicing portal. So there's this e-invoicing portal that has just been introduced. However, it's not for every company yet. It's just for large companies with a turnover of 5 billion and above for now. So as time as the FIRS makes progress and the introduction becomes successful, we'll see that other smaller companies will also be integrated into the system. Finally, I would like to talk about, excuse me, please. Finally, I would like to talk about the personal income tax, the introduction of the personal income tax, the modification rather of the personal income tax. The personal income tax has introduced rent relief. Before now, we used to have consolidated relief allowance, which used to be at either 200,000 naira or 1% of your gross income. Your gross income, that's from your employment or from your income as a sole proprietor, plus 20% of your gross income. But that has been taken out entirely. It has now restricted every individual to a rent relief of 200,000 naira or 20% of the annual rent that was paid in a year. But that relief is still limited to 500,000 naira at the most. That is, whatever, if for instance you paid 10 million in a year, you can claim the higher of either 200,000 naira or 20% of 10 million. And 20% of 10 million might not even, of course, it won't reach 500,000. So the maximum you are still able to claim in a particular year for rent relief is just 500,000 naira. Then the rates of taxes for individual has changed. I think I mentioned that earlier. Before now, it used to be a graduated rate of 7% to 24%, but that has changed. Now the graduated rate is from 0% to 25%. I mentioned 23% before. I'm sorry, it's 25%. It's now from 0% to 25%. And the threshold for the income using the new rate has also changed. The threshold is now from 800,000 naira. So if you are earning 800,000 naira or less than that per annum, your taxes will be zero. Before now, if you are earning as low as 300,000 naira, you are still liable to taxes in Nigeria. So summarily, I think this incentive for individuals, especially with respect to your personal income tax, has eased a lot of burden on taxpayers who are earning way less than many other people. Then, in conclusion, like I said when I was starting, regulatory compliance is not just a legal requirement for the sake of just being there. It is what will give you growth or will give you credibility, what will improve transparency, and it's also for the government for stability purpose. So you must know what you're supposed to do as an individual. You must understand the business environment. You must understand your obligation, like we have mentioned, your obligation to file, your obligation to remit your taxes, your obligation to file your returns, your obligation to even register for taxes to start with, and every other annual filing you're supposed to do as an incorporated company. You're supposed to have an understanding of this to stay compliant in the business environment. Thank you.
Thank you very much. Thank you very much. That's been a very impactful section. Please, can we use our emoji to celebrate our facilitator? She had really done a lot of justice to. She had done justice to it. Yeah, like Doctor just said, he said very technical. Yes, she has done a whole lot of justice to this matter, and except you didn't pay attention, most especially the last part where she broke down the tax for us to let us know this is what you're paying now. If you're earning this, if you're earning that, this is what your tax is at the moment. Okay, so very quickly, I would like us to take questions. Please, if you have questions, can you use the emoji, the raise your hand emoji button, so that we can do a head count and we take those questions as quick as possible.
Okay.
The first one quickly is some of us read that there would be an increment in the total cost or charges in registering a limited liability company in Nigeria as from 1st August 2025. So I want to know if that is true. And if it is true, what is the update on the new amount that must be paid to register a limited liability company? That's the first question. Then the second one is for one that has two incorporated businesses and one of the two has become inactive. I want to know if the usual annual turnover charges of 10,000 naira has been increased to make your LLC active. Number three is the last one. Unlike that of directors, is the appointment of a company secretary compulsory at any time in the course of doing business? Also, can one of the directors of the company be appointed to also serve as a secretary? These are my questions. Thank you very much.
Okay, to answer your question, the first question about incrementing charges, yes, I'm aware about that as well. And yes, I believe it is true. However, the recent update, as of yesterday or as of today, when it's supposed to become effective, I'm not very in tune with that. So I can't speak to that. Then your last question about appointment of company secretary. My understanding is that appointment of company secretary is supposed to, your company secretary is supposed to be someone in the legal space. That's my understanding. Not just anybody, not secretary as per your PA or your assistant. It's supposed to be somebody in the legal space. So that's my understanding of who a company secretary is supposed to be. So if you are considering any of your directors, I don't think that is right. Your director cannot be the company secretary. That's another thing you should understand. I think you asked about payment of 10,000. Can you come again with that last question?
So I think he's also struggling with his next one. So let's move to the next question, and we can probably just help us drop that in the comment section, then we can read it out. So Sheun, can we have you?
Hi,
Hi, Sheun.
good. Oh, sorry, it's morning here. Good afternoon in Nigeria. Okay, so my question is very simple. But just two questions. Just wanted clarification. First of all, fantastic work. I'm going to definitely connect with you on LinkedIn. Oluwaferni come here and maybe pay you to consult for us. But the question I have is, we are registered as an entity in the US, where I am right now, and then we also registered as an entity in Nigeria. I'm trying to avoid double taxation yet, because the way I structured it is the entity in the US is not a parent company to the entity in Nigeria. They are different entities. But it just seems that every time I'm trying to go through this hurdle, this double taxation comes in. I'm registered as an S corporation in the US, not Delaware Corporation. I'm registered as just a normal business in Nigeria, in Lekki. Then my second question is, my developers, they are parrying for me. You know how developers are. I'm a tech company. They don't want me to file for payee. So I pay them directly into their accounts, and they don't want me to file with Lagos State Inland Revenue as per you get the payee till the pay. You understand what I mean? The PAYE. Do you advise that I comply with them so that they don't rebel? Or should I still go ahead and file the payee so that I declare how much I'm paid by developers and by designers and all the other staff in Nigeria. Thank you.
Yeah, thank you. Okay, to start with, let me start with your last question. Your developers are not doing the right thing. They are how do I put it now? They are going against the law, and there are penalties for that. When I started speaking, I generally talked about penalties for non-compliance. They are not being compliant, and it's beyond the purview of just the taxes now. It will affect your business because there's what we call employer's annual return. There is another thing we call employee annual return. The day the FIRS will decide to pick up your company for an audit, it will be a serious issue, except you're not registered or except your business is not fully registered in Nigeria. As far as your business is registered, just know that very soon they would find you. So it's best to just be compliant. You don't get to lose anything from being compliant, to be honest. It's best to just be compliant. I mean, you earn in Nigeria, it's just right to remit your taxes as well. Then your first question about double taxation. Again, I think I would prefer to have more understanding. If you've registered your business as two separate entities, I see no reason why you should be caught in the web of double taxation. The only problem will be that maybe you're having frequent transaction with your entity that is registered in the US. Then it will raise an eyebrow. Then they will start digging deep into it. Aside that, I don't see a reason why you should be caught in the web of double taxation because your businesses are registered as different entities entirely. I don't know if you understand that. So I would like to understand when you say double taxation, what exactly do you mean? Okay, that's fine. You got your message.
Hi, thank you very much. This name, Message to Christ, rather. Can we have your question?
Okay. Thank you so much for the opportunity, Edfrica. I really appreciate because this will really help us to be accountable for legal compliance and all, and to have the base knowledge of everything. So my question majorly is that she talked about you being incorporated and getting your business registered, and there's a tax identification number that comes with it. So I want to ask, if you register your business or incorporate it maybe like 9 months ago, but you've not launched your business, you just register, and will it start counting, or will you start filing from the point or from the moment you register your business, or until you start your business properly? That is when you're entitled to start filing. Thank you.
Yeah. So there's a difference between incorporation date and commencement date. So you can register your business last year and not even start any actual business this year. So that's the difference between commencement. For tax purpose, we usually consider the commencement date of the business. However, for CAC purpose, I think you are still obligated to do your annual filing. So you must understand that difference. Commencement date is different from incorporation date.
All right. Thank you so much.
You're welcome.
Okay, so the last but not least, can we have you, Julian and Moses? Can take your question and we can wrap up for today. Iseoluwa, I would love to really appreciate you. Thank you for your time. Thank you for helping people understand what the tax is all about and what they need to know. But before we will bring this to an end, I would love to hear from our co-founder, impression of Dr. Emmanuel Odumusi.
So I'd like to say thank you to everyone again for being part of this. Our goal as an organization is to keep helping, supporting, and provide all these as much solution as is required for your business to grow. So we have a WhatsApp group where all these your questions can be asked there, and she will be able to provide answers to you. Also, You have maybe Wale, you can drop your contact or the official line. If you have further questions or you need support around you setting up the tax and all. You, for me, it was quite a technical session, which was fine, but not all of us are very technical. So not everybody is technical, and so maybe we don't want to go through all the details. We're sure that Isheoluwa will be available to support and will be able to help. So please, that is the phone number there. Please screenshot, get the phone number, and just chat up and say, "Oh, I was at the workshop, I was at the training. I really need help around um my tax. I don't know how to start. I don't even know what to do. I don't know what kind of tax. Isheoluwa, get ready. I know I brought you on board earlier to do some things. Now you've made it complicated for me. I'm more on the edge now because there's so many taxes that you've listed out that I've never heard of before. And I'm happy, I'm sure that there are so many other people like me too. So please make sure the phone number that's been dropped there, please and please save it. Send your message there and say, I actually need to clear my do manual filling. Usually it's not expensive, especially if you are just starting your business. And we'll work with Isheoluwa to support as many people as possible. Also, if you're on this group or you're in this meeting and you have the capacity to provide some of these services, send a message to the number. We'll do some KYC, some verification. And once we do the verification, we surely can send entrepreneurs and SMEs to you for you to help them. Thank you once again, everyone, for being in this session. We hope to see you again next month with another quality quality and informative session. So thank you once and again, and do have a lovely day. Bye.
All right. Thank you very much, Dr. Emmanuel. Thank you, facilitator Isheoluwa. And thank you,
Thank
everyone,
you
for
so
joining.
much, everyone. Yeah.
Do have a beautiful weekend, everyone.